Welcome back to Investing with Confidence on this special holiday weekend. Santa Claus is back. I am your host, Joshua David, and we have been talking a little bit about some of the retail high flyers of the year, I guess the most held by the public of different stocks and different investments. And, I gave away some tickets for an investing class on the last segment here. I want to make sure people have an opportunity to do that. You can call 952-814-4410 for 2 tickets for the investing class. Or you can just text the word invest to the number 484848. When you do that, you'll get a text back with a link to get set up with the registration page. We do these classes during the week. We also have these on the weekend, and they're about 2 hours. Al teaches these, I teach these. We have a great time talking about the stock market. So, Al, as we continue this, number one retail investing, top 10 stocks held by the retailers. The next one, as I teased in the last segment, is a Chinese electric vehicle maker, and it's called NIO. And net purchases on 2021 roughly around 6.8 billion. But this is the number 3 held stock by the public, retail traders and investors.
Right.
And year to date, this stock is actually down roughly right around, as doing this show here, about 56%.
Right.
Now think about that for a second. People are buying and holding stocks, and this is a top stock for retailers. It's actually down 56%.
Right.
But the market, as you said, I believe up, 24, 25%?
About 26%
on the year. So let's talk about that for a second.
Yeah, well, the good thing for us, really what we're talking about here when we're talking about these stocks held by retail traders is there's an emotional component to their trading. And fortunately for us, we can identify that and use that to our advantage. We hate to say that we're taking advantage of people out there, but that's what the institutions do. That's what the big traders do. They know that people are going to make their decisions based on feelings and emotions, and they take advantage of that. And we can read that on a chart. And that's the important thing, is be able to understand how to read a price chart of any asset, whether it's an individual stock or the market, so you can kind of determine where those emotional decisions are going to be made. When they make them, they just drive the price of the stock up or down into an area where we want to be ready to buy or sell.
Yeah, when you're talking about the emotions of the public, I mean, this stock is, potentially an emotional stock because it's an electric vehicle maker.
Sure.
Do you think that's why so many people bought and held this stock, is because of its electric vehicles?
Yeah, and I think that probably all started with Tesla. People saw what Tesla did, which is phenomenal, and they expected these other companies to do the same thing. And to be honest with you, NIO actually started out, they had record delivery figures on their cars, so things looked really good. It drove them into a high, which I think was around $62 a share. And then there were some issues with some Chinese companies. There was at least one, that ride-sharing company, Didi, that was delisted. So the Chinese government can sometimes do things that will cause a movement in a particular asset or assets in general. That's what happened to NIO. It went from that $62 down to, I think it's somewhere around $29 a share now.
About $30 per share right now.
$30 a share. So that was a big drop. And again, it was probably a combination of the institutions starting to sell and then the emotions of the public jumping in and quickly driving it down. Probably is going to be an area where we're going to see a demand zone where buying will start to take place again.
Yep, yeah, that's right. And we were talking about some of these stocks, the Apples, the AMDs, the NIO. Well, here is one that I'm sure everybody has heard about, talked about. I mean, this has been a high flyer on the year, and that would be AMC.
Right.
That movie theaters, right? Now, roughly around $4.07 billion in net purchases. Year-to-date performance is up about 1,200, 1,300% roughly. Now, think about this for 1 second. So a lot of people invested into AMC after the hype came in. This would have been back in May and June, and off its highs now. Actually, roughly about 60% down off its highs.
Right. Even though it's up for the year, it's down that much from its high.
And I think a lot of that is a lot of investors get into the market after that move happened, and then I'm sure there's a lot of investors underwater right now.
Right. Well, AMC was part of the the GameStop AMC thing that the Reddit followers and Robinhood traders drove up. They basically looked at stocks that were highly shorted and decided to take the other side of it, drive the price of the stock up, causing the short positions held by hedge funds
Yeah.
to buy to cover their losses, driving the price up even more. The problem is people got, again, emotionally involved. They saw this thing go up. When you have something that's up over 1,000% and you didn't get in,
That's
you're thinking,
FOMO.
well, maybe it'll go up another 1,000%. I'll
Yeah.
get in. So a lot of people, somebody got in at the peak. A lot of people got in at the peak, and then it went from like $77 down to, what is it now, around 27?
It's at about $28 a share, 28.50 roughly right
Yeah.
now.
If you go back, even around July, if you're pulling up a chart there, I think you
Yep.
can find trouble started right around July 2nd. And
You're right, yep.
and that's when the price of that stock, it just cratered. And again, there's that chart tells a story. It tells us what's happening. And if
Mhm.
you learn how to read those charts, which is what we do in our classes, that's the same thing as, say, a doctor reading an X-ray or an MRI.
Yeah.
They can do that because they've been trained.
Yep.
Same thing is true of our students.
Yeah, it's crazy with AMC. I mean, that started out roughly around $1 something per share,
Yeah.
$2 per share.
Right.
Crazy. Went up to about $72 per share, 72.60 around there. And as Al was talking about, down to about 28, 29 bucks per share right now. So big volatility. And a lot of people, I mean, there was a lot of people talking about, buying way out of the money options for super cheap and just wasting a lot of capital. And it basically went sideways really since July. I mean, it hasn't moved much. So a lot of people are kind of holding the bag, hoping things continue to go up. And as we're seeing a downtrend forming now as well.
Yeah.
And Al, you talk a lot about that, learning how to read a price chart and not just guessing or waiting for the news to come out and get into these investments, into these investments. Hopefully before these moves happen. That's the key of trading and investing. So you need a strategy that's designed to do that, to find how the institutions are, moving these markets, where they're buying, where they're selling. It's called our core strategy. So I want to give away some tickets to an investing class to learn more about core strategy, to learn more about timing the market, how to enter positions with low risk, high reward, high probability entry points. And that's typically at or near a turn in price. So just call 952-814-4410 for 2 tickets for this investing class right here in Bloomington. We kind of get into all the assets, but really stocks, especially this last year with great movements in the market. You can also text the word invest to the number 484848 for those 2 tickets. When you get set up for this class, you're going to get a registration page and a text right back. You're going to receive a financial quick start kit with a few different lessons on strategies to profit from down markets, different secrets that Wall Street doesn't want to tell you, but also the different ways to calculate returns on an investment. So just text the word invest to the number 484848. Al, number 5 here.
Before you mention number 5, let me just
sure.
say something. We were still talking about AMC. A lot of people wrote it up. They were up over 1,000%. A lot of people then wrote it all the way down.
Yeah.
And that shows us that people don't know how to protect their assets. You could have had protection. Maybe you had a small loss. But you know what? A small loss is okay. But you know what's not okay?
A big loss.
A big loss. A small loss can never become a big loss. So the number one thing that we teach our students that everybody should learn before you even think about being in the market is how to protect what you have. It's risk management.
Yep. Yeah. Number 5 here is PLTR. It's a data mining company with defense contracts, and that's the number 5. Held by retail investors. Net purchases right around $3.6 billion. Year-to-date performance down about 19%. And it's just another one here. Great moves from November of 2020 all the way up to looks like January of 21. So it went from down from $9 per share all the way up to $45 per share, and then dropped, and now it's been sideways.
Yep. Now it's trading around $18 a share.
Yep.
So even though we show that it was down, what did you say? It was down about
19% year to date.
But from its peak at 45 down to 18, that's about more than a 50%.
It's
drop
actually
from its high.
60% from the actual high, down about 60%, just like AMC.
Right. So you could have protected yourself. What if you could have made money on that drop when it was going down?
What does that mean? What's that called?
Well, you can either short a position if it's available for shorting through your broker, you can have an option on it that will go up as it goes down in value. You can maybe look at the area of the market, the index or the sector that it's in. You can do probably what we call an inverse ETF on that sector. That's an exchange traded fund that goes the opposite direction of the underlying. So there are a number of ways that you could have you wrote it, had a benefit or profit on the way down, but at the very least, you could have been protected with a pretty nice return.
Yeah, so basically, roughly, it went up about 333%, 337% roughly from looks like for our YouTube watchers, October, early November to about January of 2021, and then it dropped 60%. So a lot of people got in after things got real popular. It
Right.
gets on the news. And as Al was talking about, there's potential downward strategies. It's called shorting. So basically, for just as an example, if an investor gets into a position, let's just say at $40, and price goes down to 30, there's $10 difference there. And if they open their position high and close it low, that's actually a profit that investors can realize there.
Right.
So it's just having two different strategies in your tool belt. So Al, that number 6 stock held by retail investors is that good one that I think a lot of people love, and that's Verizon Wireless. And net purchases roughly around $3.07 billion year to date. Another one down 9.5%. Al, this is kind of a trend here. I think you said earlier, what, 4 out of 10
4 out of the 10 were down for the year,
down year
and
to
these are
date.
the most highly held stocks by the public.
That's crazy. I mean, this one's down, like I said, about 9.5% on the year. Everybody knows what Verizon is, a phone company. And it's really, if you really look at a price chart for our YouTube listener or watchers, it's really been sideways from, it looks like really from 2019.
Yeah, if you go back to December of 19 and December of 2020, in both areas you're going to find supply zones, areas where our strategy would have told our students there's a good opportunity to short the stock at that point in time, or at least get out and protect your profits. It's the telecom stocks have been down. This is the largest mobile carrier, and they did have better than expected earnings for the third quarter. So maybe there's some opportunities. But you don't have to just hold something and let profits be taken away from you, or let opportunities in a different direction be taken away from you.
Yeah, I mean, just looking at the overall market from April till now, the S&P 500, the Nasdaq, these all have really been soaring, and since April, this stock is actually down 12%. So people that are just holding these stocks, they here's actually facts and proof that they all don't go up. And as you kick the show off too, is a small basket of stocks has really been catapulting these markets,
Right.
which is kind of it's almost like advancers decliners, where there's different stocks that are going up, different ones are going down. If the majority of them are going down and you see the markets actually going up, it's a divergence.
Yeah.
And it actually brings more pressure on the market. And there's just different things that that we teach at Online Trading Academy to hopefully add odds into your trading and investment strategy, where people get started to learn more about these different stocks, different ways to invest in the markets, whether it's for short-term income potential, or maybe it's just long-term wealth building, or that goal. We have investing classes to get started. And these are classes where we've taught thousands, just like you, are many strategies on stocks, options, futures, Forex, cryptocurrencies, and it's all about making smarter investing decisions. So I want to give away 20 tickets for callers 1 through 10. When you call in right now, you're going to receive 2 tickets plus a financial quick start kit, which will help you get started right away. You can call 952-814-4410. That's 952-814-4410. Or you can just text the word invest to the number 484848. When you do that, we'll send you a text right back. There'll actually be a little preview link with what to expect in this upcoming workshop. They're about 2 hours, but also a link for our registration page. This will get you set up for the date that makes sense for you. We have these during the week. We also have these on the weekend. So just text the word invest to the number 484848. Al, we have a couple more high flyers on the year. Tech companies, another phone company, and something I think It's very similar to one of our largest companies in here in the United States. We'll be right back.